Close your eyes. October 1st, 2020. The U.S. Department of Justice unseals an indictment against the founders of BitMEX, one of the world's largest cryptocurrency exchanges. The charges: conspiracy to violate the Bank Secrecy Act. In plain language, running an exchange with no anti-money laundering controls, letting anyone in the world trade with no identity checks, and knowingly serving customers under U.S. sanctions. Arthur Hayes, the CEO, is not in New York when it happens. He is in Asia. He turns himself in 5 months later in Hawaii. Hayes had built BitMEX from a Hong Kong apartment in 2014 with 2 partners and almost no money. The idea was simple and radical at the same time. Give crypto traders leverage, not 2x or 5x, the way traditional brokers offered. 100 times. You put in $1,000 and you could control a $100,000 Bitcoin position. If Bitcoin moves 1% in your direction, you double your money. If it moves 1% against you, you're wiped out. By 2018, BitMEX was processing more Bitcoin trading volume than any other exchange on Earth. Some days more than all other exchanges combined. And the fees it was collecting, at a fraction of a percent on every trade, were turning Arthur Hayes into one of the wealthiest people in crypto. This is the story of BitMEX, how a 28-year-old trader from Buffalo built the most powerful derivatives exchange in crypto, how he ran it like there were no rules, and what happened when the U.S. government decided there were. Yet with great power comes a shadow. While BitMEX democratized access to leverage, it also became a crucible of risk. The very mechanisms that underpinned its operations, particularly its liquidation processes, drew sharp criticism. Detractors argued these mechanisms were predatory, engineered to profit from traders' losses. Defenders, however, lauded their efficiency and necessary role in maintaining market stability. It was a debate as charged as the markets themselves. Behind this high-stakes platform stood Arthur Hayes, a man whose charisma was matched only by his daring. He was a leader who thrived on the edge, a visionary who saw beyond the constraints of conventional trading. But as BitMEX's prominence grew, so did the scrutiny. Hayes found himself under the watchful eyes of regulators and eventually the target of criminal charges from the U.S. Department of Justice. The allegations were severe, the consequences potentially dire. This is not just a story about an exchange or an entrepreneur. It is a story about the transformative power of financial innovation, the thin line between genius and hubris, and the relentless pursuit of opportunity in the digital age. It is about the inevitable clash with regulatory realities, the ethical dilemmas of high-stakes trading, and the lessons that emerge from pushing the boundaries of what is financially possible. As we journey through the rise and fall of BitMEX, we will uncover the intricacies of modern finance, the human stories behind market movements, and the legacy that BitMEX and Arthur Hayes leave in their wake. In this narrative lies a cautionary tale, a testament to ambition, and a glimpse into the future of cryptocurrency trading. Now, with the scene set and the stakes established, we delve deeper into the life of the man who dared to challenge the status quo. Prepare for Chapter 1, Arthur Hayes, the making of a trader. Now, with the scene set and the stakes established, we delve deeper into the life of the man who dared to challenge the status quo. Prepare for Chapter 1, Arthur Hayes, the making of a trader. Arthur Hayes was born in the city of Buffalo, New York, in 1985. A city known for its steel production and snowy winters, Buffalo sits on the eastern shores of Lake Erie. In many ways, Buffalo shaped Arthur's formative years. It taught him resilience and the value of hard work under the often gray skies and freezing temperatures. As he grew, so did his ambitions, leading him to the prestigious Wharton School at the University of Pennsylvania. Graduating with a degree in economics, Arthur Hayes was part of the class of 2008. It was a year marked by financial upheavals and the global financial crisis, which deeply influenced the way he viewed the world of finance. The collapse of giants like Lehman Brothers left an indelible mark on his psyche. Armed with his degree, Arthur moved to Hong Kong, a vibrant metropolis and one of the world's leading financial centers. It was here that he cut his teeth as an equity derivatives trader. Arthur first joined Deutsche Bank, a global institution with deep roots in the finance industry. His role required precision, an understanding of complex financial instruments, and the ability to make quick decisions under pressure. By day, he navigated the labyrinthine world of financial derivatives. By night, Arthur immersed himself in the unique culture of Hong Kong. The bustling streets, the fusion of East and West, and the relentless energy of the city matched his own ambitions. After Deutsche Bank, he transitioned to Citigroup, continuing his work as a trader. In Hong Kong, Arthur honed skills that would later prove invaluable. He developed an astute ability to assess risks and opportunities, critical traits for any successful trader. The city's dynamic environment also exposed him to emerging technologies, including the nascent world of cryptocurrencies. It was 2013 when Bitcoin first caught Arthur's attention. At the time, Bitcoin was still largely obscure, a digital curiosity known mostly to tech enthusiasts and a handful of visionary investors. Yet, Arthur saw something more, a disruptive force capable of reshaping financial systems. He was intrigued by its decentralized nature and the potential it held for a new kind of trading. Arthur's curiosity turned into a deep dive into the world of Bitcoin. He spent countless hours studying blockchain technology, understanding its mechanisms and possibilities. The more he learned, the more convinced he became that Bitcoin could revolutionize derivatives trading. He saw a gap in the market, a lack of sophisticated financial products that could cater to traders eager to leverage their positions. In 2014, driven by this vision, Arthur Hayes, alongside partners Ben Dello and Samuel Reed, launched the Bitcoin Mercantile Exchange, or BitMEX. They headquartered the venture in Hong Kong, a city that had become synonymous with Arthur's journey. BitMEX was launched with the idea of providing a platform for trading cryptocurrency derivatives, something that was virtually unheard of at the time. The exchange offered products that allowed traders to bet on the future movements of Bitcoin's price, combining Arthur's understanding of traditional finance with the innovative potential of cryptocurrencies. BitMEX was not just another entry into the fledgling crypto space. It was a bold experiment. From its inception, the exchange offered up to 100 times leverage, allowing traders to multiply their positions exponentially. This was a game changer, enabling more significant risk-taking and potentially larger rewards. Arthur's background in equity derivatives provided the credibility and expertise needed to execute such a daring concept. By 2016, BitMEX introduced the perpetual swap, a groundbreaking financial instrument in the crypto space. The perpetual swap allowed traders to hold positions indefinitely without needing to worry about expiration dates, a feature that set BitMEX apart from its competitors. The perpetual swap quickly became popular among traders who valued its flexibility and continuous trading opportunities. At the heart of these innovations was Arthur Hayes. His leadership was characterized by a willingness to challenge norms and a vision to democratize financial leverage. Under his guidance, BitMEX grew rapidly, becoming the largest Bitcoin derivatives exchange by trading volume from 2014 to 2020. Arthur's journey from Buffalo to BitMEX was not without challenges. The volatile world of cryptocurrencies required constant adaptation and a thick skin. Yet, his upbringing in Buffalo had prepared him well for adversity. The lessons learned in the snowy city and the cutthroat world of Hong Kong finance equipped him to navigate the ups and downs of the crypto market. Despite BitMEX's success, the exchange and its leadership faced mounting scrutiny. Critics argued that the high leverage offered was a double-edged sword, amplifying not only profits but also potential losses. Arthur remained an enigmatic figure, respected by many in the crypto community for his pioneering work, yet also a lightning rod for controversy. As we conclude this chapter of Arthur Hayes' life, we see a man who transformed an idea into reality, leveraging his education, experience, and vision to create something extraordinary. His story is one of ambition and risk, a testament to the potential of innovation even in uncharted territories. In the next chapter, we will delve into the mechanics of the perpetual swap, exploring its significance in the crypto derivatives market. Join us as we uncover how this invention reshaped trading practices and paved the way for the future of cryptocurrency trading. Join us as we uncover how this invention reshaped trading practices and paved the way for the future of cryptocurrency trading. The year was 2016, a year that would quietly revolutionize the landscape of digital currencies. In the bustling city of Hong Kong, Arthur Hayes and his partners at BitMEX were on the verge of a breakthrough. Together with Samuel Reed and Ben Dalo, they were about to introduce the perpetual swap, an innovation that would forever change how traders interacted with cryptocurrency. The perpetual swap was not just a new product, it was a paradigm shift. Unlike traditional futures contracts, which come with an expiration date, the perpetual swap was designed to never expire. This allowed traders to hold their positions for as long as they desired, without the pressure of a looming deadline. It offered a continuous exposure to Bitcoin without the usual hassle of rolling over contracts. This innovation came when the cryptocurrency market was still finding its footing. Bitcoin had only been around for 7 years, having been introduced in 2009 by the enigmatic figure known as Satoshi Nakamoto. In those early days, trading was limited to simple buy-and-hold strategies. The idea of leveraging Bitcoin to amplify potential gains or losses was still novel. BitMEX's perpetual swap disrupted this norm. It introduced a form of leverage that was unprecedented, up to 100 times on a trader's initial capital. Consider this. With a mere $100, a trader could control $10,000 worth of Bitcoin. This level of leverage held the allure of significant profits but also carried substantial risk. It required precision, strategy, and nerves of steel. Arthur Hayes, with his background in equity derivatives at Deutsche Bank and Citigroup, understood this market's complexities. He knew that while the potential for gains was enticing, there was an inherent risk of liquidation. Traders could lose their entire initial margin rapidly if the market turned against them. Yet, Hayes believed in empowering traders with choices. He saw the perpetual swap as a tool for those willing to navigate its challenges. The creation of the perpetual swap wasn't without hurdles. Developing a product that could operate seamlessly without a natural settlement date required ingenuity. It demanded a new approach to funding rates, regular payments between buyers and sellers to keep the contract price close to the spot price of Bitcoin. This mechanism of funding rates was the linchpin that allowed the perpetual swap to function as intended. Hayes and his team gauged the delicate balance this required. They meticulously designed algorithms to calculate the funding rates, ensuring market stability. This system was complex, yet it became a cornerstone for BitMEX's operations. BitMEX's success hinged on the perpetual swap's reliability, and it delivered. The response from the trading community was swift and enthusiastic. BitMEX began attracting traders from around the globe, eager to capitalize on the new possibilities. By the end of 2016, BitMEX's trading volume was skyrocketing, with millions of dollars in Bitcoin being traded daily. The exchange, once a small player in the rapidly evolving cryptocurrency scene, was now setting new standards. For the traders on BitMEX, the perpetual swap was both a blessing and a challenge. Its continuous nature meant that market movements could lead to significant profits or devastating losses in minutes. The stakes were high, and the market was unforgiving. Yet for many, the perpetual swap embodied the spirit of cryptocurrency, a decentralized, volatile, and high-risk environment where fortunes could change in an instant. The impact of the perpetual swap was felt far beyond the confines of BitMEX. Other exchanges soon took notice, leading to a proliferation of similar products across the industry. The perpetual swap became a staple in the toolkit of crypto traders, shaping strategies and market dynamics. Arthur Hayes and his team had not only created a product, they had set in motion a new era of trading, an era where leverage became accessible to anyone with an internet connection and a willingness to take risks. It was a democratization of sorts, bringing complex financial instruments to a broader audience. Yet, with this innovation came criticism. Many questioned the ethics of offering such high leverage, pointing to the potential for financial ruin among inexperienced traders. The perpetual swap's allure was undeniable, but so was its danger. Critics argued that it preyed on the naive, those drawn to the crypto markets by dreams of quick wealth. BitMEX's liquidation system also came under scrutiny. Traders whose positions were liquidated often saw their entire investment vanish in seconds. The system was efficient but ruthless, and it sparked debates about the responsibility of exchanges toward their users. Despite the criticisms, Hayes maintained his vision, a platform that offered tools and opportunities, leaving the decisions and their consequences to the users. As 2016 turned to 2017, the influence of the perpetual swap continued to grow. BitMEX had established itself as a dominant force in the crypto derivatives market. Traders from New York to Tokyo and London to Sydney were engaging with this new form of trading. The perpetual swap had become a fixture in their strategies, a daily tool in navigating the volatile seas of cryptocurrency. The invention of the perpetual swap marked a turning point, not just for BitMEX, but for the entire crypto trading industry. It highlighted the ingenuity that was driving the space, an industry defined by rapid innovation and an unyielding pace of change. As we look back on this period, the perpetual swap stands as a testament to the creativity and ambition of those who dared to redefine the boundaries of finance. As we close this chapter, we see how the perpetual swap set BitMEX on a trajectory that would lead it to become the largest Bitcoin derivatives exchange in the world. It was a journey fueled by bold ideas, technical acumen, and a willingness to embrace both risk and reward. In the next chapter, we will explore how BitMEX rose to prominence, capturing the imagination of traders worldwide, and how its growth echoed throughout the entire cryptocurrency ecosystem. Join us as we continue to trace the extraordinary ascent of BitMEX and its indelible mark on the history of digital finance. Join us as we continue to trace the extraordinary ascent of BitMEX and its indelible mark on the history of digital finance. The story of BitMEX is not just about a trading platform. It's about ambition, innovation, and the relentless march of technology into uncharted territories. By 2014, the world of Bitcoin was an untamed frontier. Prices fluctuated wildly, fortunes were made and lost overnight, and the need for sophisticated financial instruments became increasingly apparent. Arthur Hayes, alongside his co-founders Ben Dello and Samuel Reed, saw an opportunity to fill this gap. BitMEX was born out of this vision, a platform designed to cater to seasoned traders who desired something beyond the simple buying and selling of Bitcoin. It was a place where they could leverage their trades up to 100 times the value of their capital. This kind of leverage was a double-edged sword. It promised enormous profits, but also carried the risk of catastrophic losses. The key to BitMEX's early success was its flagship product, the perpetual swap contract. This innovative financial instrument mirrored the profit and loss profiles of traditional futures contracts without the inconvenience of expiry dates. Traders could hold positions indefinitely, allowing for a continuous play in the ever-volatile crypto market. As word of the platform's potential spread, BitMEX's user base exploded. By 2016, it was not just another fringe platform, but a major player in the burgeoning world of cryptocurrency trading. According to data from early 2017, BitMEX handled more than $2 billion in transactions daily, a staggering figure that underscored its rapid growth. The exchange's headquarters were strategically positioned in Hong Kong, a city pulsing with financial energy and innovation. This location was not just a geographical choice, but a strategic one, reflecting the city's status as a hub for Asia's financial technology boom. Arthur Hayes, with his background in traditional finance, understood the importance of a robust infrastructure. Under his leadership, BitMEX invested heavily in technology. The platform boasted a sophisticated matching engine, capable of handling a massive number of transactions simultaneously, a critical feature to ensure smooth operations during periods of extreme market volatility. By 2018, BitMEX had cemented its reputation as the largest Bitcoin derivatives exchange in the world. It became a destination for professional traders seeking high-risk, high-reward opportunities. The exchange was renowned for its liquidity, allowing traders to execute large orders without significantly impacting the market price. But with success came scrutiny. As BitMEX's influence grew, so did the questions about its practices. The platform's high-leverage offerings attracted criticism from regulators and market observers who argued that they encouraged reckless behavior among traders. There were concerns about the opaque nature of its operations and the potential for market manipulation. Despite these criticisms, many traders were drawn to BitMEX for its straightforward user interface and the promise of substantial profits. Stories circulated of traders who had turned modest investments into small fortunes, fueled by the power of leverage. These tales, whether anecdotal or verified, contributed to the platform's mystique and allure. The period from 2018 to 2020 marked the zenith of BitMEX's dominance. During this time, the exchange hosted some of the largest daily trading volumes in the world, often exceeding $10 billion in a single day. Its influence was undeniable, as it set the pace for the entire cryptocurrency derivatives market. Yet, beneath the surface of this success story, there was a growing tension. Regulators around the world began to take a closer look at the operations of cryptocurrency exchanges. The lack of regulatory oversight was both a blessing and a curse for BitMEX. It allowed the exchange to innovate and grow rapidly, but also exposed it to significant legal risks. In early 2019, whispers of potential legal challenges began to circulate within the industry. The anonymity that had been a cornerstone of the platform's appeal was now under scrutiny. Questions arose about BitMEX's anti-money laundering, AML, and Know Your Customer, KYC policies. These regulatory concerns loomed large over the exchange's operations, threatening to disrupt its momentum. Despite these challenges, Arthur Hayes remained a charismatic and outspoken leader. His vision for BitMEX was clear: to create a financial ecosystem where traditional barriers were broken down and opportunities were democratized. His public persona, marked by a blend of bravado and charm, became emblematic of the maverick spirit of the cryptocurrency industry. In 2020, as the world grappled with the COVID-19 pandemic, BitMEX continued to thrive. The volatility in global markets drove even more traders to its platform, seeking to capitalize on the fluctuations in Bitcoin's price. The exchange's ability to handle this increased volume was a testament to its robust infrastructure and strategic foresight. Yet, the legal storm clouds gathered ominously. On October 1, 2020, the U.S. Department of Justice announced criminal charges against Arthur Hayes and his co-founders. They were accused of violating the Bank Secrecy Act by failing to implement adequate AML and KYC measures. This marked a turning point in BitMEX's story, a dramatic shift from triumph to turmoil. The charges sent shockwaves through the cryptocurrency community. Traders who had long viewed BitMEX as an invincible giant now faced uncertainty about the platform's future. The legal challenges highlighted the fragile balance between innovation and regulation in the digital finance world. For Arthur Hayes, the indictment was a personal and professional blow. The man who had led BitMEX to the pinnacle of success now faced the prospect of defending his actions in a court of law. The case against him became emblematic of the broader regulatory challenges facing the cryptocurrency industry. As we look ahead, the story of BitMEX and Arthur Hayes serves as a powerful reminder of the complexities and contradictions at the heart of digital finance. The ascent of BitMEX was a testament to human ingenuity and ambition, but its challenges underscore the need for accountability and oversight in a rapidly evolving landscape. The next chapter will delve deeper into the mechanisms and controversies that define BitMEX's operations, exploring the ethical dilemmas and financial intricacies of its high-leverage products. Stay with us as we unravel the machine for destruction and the legacy of risk it left behind. Stay with us as we unravel the machine for destruction and the legacy of risk it left behind. BitMEX was not merely an exchange, it was a revolution in the realm of cryptocurrency trading. Under Arthur Hayes' leadership, it became a behemoth of power and influence. Yet, with its rise came a darker side, one steeped in controversy and criticism. The allure of BitMEX's high-leverage products was undeniable. Traders were enticed by the promise of exponential gains, trading with leverage up to 100 times. For many, it was an irresistible offer. They ignored the inherent risks in pursuit of rapid wealth. To understand the impact of such leverage, we must consider the financial mechanics at play. Leverage allows traders to control a larger position with a smaller amount of capital. In traditional markets, this power is often harnessed with caution, regulated by stringent rules. But within the unregulated world of cryptocurrency, it became a double-edged sword. BitMEX's liquidation mechanisms were a focal point of criticism. When a trader's position moved against them, the exchange would automatically liquidate their holdings. This practice was designed to ensure the platform's stability, but it often left traders facing severe losses. Critics argued that these liquidations were predatory, exacerbating the volatility of the market. The human cost of these mechanisms cannot be understated. Countless traders, drawn in by the potential for profit, found themselves wiped out in sudden market swings. Stories emerged of individuals who lost their life savings in a matter of minutes. For these traders, the dream of financial freedom became a nightmare of financial ruin. Arthur Hayes, born in Buffalo, New York in 1985, was a pivotal figure in this story. His vision for BitMEX was innovative, yet it carried ethical complexities. Hayes' background, from the prestigious corridors of the Wharton School to the trading floors of Hong Kong, shaped his approach. It was an approach that valued boldness and risk, sometimes at the expense of caution. In 2014, when BitMEX was launched, cryptocurrency was still a nascent industry. It offered a playground for experimentation, free from the constraints of traditional finance. Hayes and his co-founders seized this opportunity, crafting a platform that would redefine trading. Yet, as BitMEX grew, so too did the scrutiny of its practices. By 2016, with the introduction of the perpetual swap, BitMEX catalyzed a shift in the market. This instrument, with its continuous leverage and no expiration, became immensely popular. Traders flocked to BitMEX, eager to capitalize on its innovative offerings. But with this innovation came a wider discussion on responsibility and regulation. The criticisms were not unfounded. Many argued that BitMEX's high-leverage products created a toxic environment for retail traders. The cycle of leverage and liquidation fostered a precarious market where only the savviest survived. For beginners, the odds were stacked against them. These debates brought ethical considerations to the forefront. Was it right to offer such high leverage to inexperienced traders? Did BitMEX have a duty to protect its users from their own risk-taking? Or was the onus solely on the individual to navigate these turbulent waters? BitMEX's critics were vocal, but its supporters were equally passionate. They argued that the platform democratized access to sophisticated trading tools. For many, BitMEX represented opportunity, a chance to participate in a financial revolution. The debate highlighted the dichotomy at the heart of the cryptocurrency world. The legacy of BitMEX is intertwined with both its successes and its controversies. It pushed the boundaries of what was possible in cryptocurrency trading. Yet, it also exposed the vulnerabilities of a largely unregulated market. As BitMEX grew, so too did the call for greater oversight and accountability. The story of BitMEX serves as a microcosm of the broader cryptocurrency landscape. It is a world where innovation and risk walk hand in hand, where fortunes are made and lost in the blink of an eye, and where ethical debates are as common as technological breakthroughs. In the world of BitMEX, Arthur Hayes stood as a symbol of ambition and audacity. Yet with that ambition came a complex legacy, a legacy that raises questions about the future of finance and the role of those who shape it. As we move forward, the lessons of BitMEX will continue to resonate. The machine for destruction, as it was so often called, left an indelible mark. It challenged norms and sparked conversations that continue to this day. In understanding its impact, we gain insight into the evolving world of cryptocurrency, a world that remains both tantalizing and treacherous. BitMEX's story is not yet complete. As regulations tighten and the market evolves, its legacy will undoubtedly shape what comes next. Yet, amidst the complexities, one thing remains clear. The impact of BitMEX will be felt for years to come. As we close this chapter, we look ahead to the individuals behind it all. In our next chapter, we delve into Arthur Hayes' leadership. We explore the man whose vision set the stage for one of the most dramatic stories in cryptocurrency history. Stay with us. Stay with us. Arthur Hayes was not merely a trader, but a visionary who saw beyond the immediate horizon of cryptocurrency markets. Born in Buffalo, New York, in 1985, Hayes' early life was steeped in an environment that valued education and ambition. His path to prominence was paved through his academic tenure at the Wharton School of the University of Pennsylvania, where he graduated with a degree in economics. This formative experience would serve as the bedrock for his revolutionary ideas in the nascent crypto markets. Hayes' career began on the well-trodden path of traditional finance. He joined the ranks of Deutsche Bank and later Citigroup, operating as an equity derivatives trader in Hong Kong. These roles provided him with a deep understanding of financial products and the mechanics of risk, knowledge that he would later channel into BitMEX, the Bitcoin mercantile exchange. His move to Hong Kong was not just a career choice, but also a cultural immersion that would influence his leadership style. Hong Kong, a bustling financial hub, offered Hayes a vantage point into global markets and the potential of emerging technologies. Here, amidst the skyscrapers and frenetic pace of the city, Hayes began to conceptualize a platform that would cater to a new breed of trader, one that embraced the volatility and potential of Bitcoin. BitMEX was born in 2014 from this vision, marking the beginning of a new era in cryptocurrency trading. Hayes, alongside his co-founders Ben Dello and Samuel Reed, set out to build an exchange that could capture the imagination and capital of traders worldwide. But it wasn't just the platform's technical capabilities that set it apart. It was Hayes' charismatic leadership that drew traders to BitMEX. Hayes was known for his public persona, often seen in tailored suits and exuding confidence. He was articulate, often speaking at conferences and engaging with media, presenting himself as the face of the future of finance. His background in traditional finance lent him credibility, while his embrace of cryptocurrency marked him as a pioneer. This duality made Hayes both respected and controversial, a leader who was unabashedly bold in his approach. His leadership style was both admired and critiqued. Within the corridors of BitMEX, Hayes was known for fostering an environment of innovation and risk-taking. He encouraged his team to think creatively and challenge the status quo. Yet this approach also led to an aggressive business model that prioritized growth and market dominance. BitMEX's products, offering up to 100 times leverage, were a testament to this philosophy. Hayes's vision for BitMEX was not just about creating wealth, but also about democratizing access to financial markets. In interviews, he often spoke about empowering individuals through the platform, providing tools that were previously accessible only to institutional traders. This narrative resonated with many, attracting a diverse user base from around the world. However, as BitMEX grew, so did the scrutiny of its operations. The platform's high-leverage offerings and liquidation mechanisms drew criticism, with some accusing it of fostering a predatory environment for retail traders. Hayes, ever the public figure, defended BitMEX's practices, emphasizing the importance of personal responsibility in trading. Amidst the plaudits and criticisms, Hayes remained a steadfast leader, steering BitMEX through turbulent waters with a blend of charisma and strategic acumen. His ability to navigate complex market dynamics while maintaining the loyalty of traders and employees alike is a testament to his leadership skills. Yet this same boldness would eventually bring about challenges of its own. Outside the trading floors, Hayes's life in Hong Kong was marked by a blend of work and leisure. The city, with its vibrant culture and relentless energy, mirrored the pace at which BitMEX operated. Hayes was a part of its fabric, attending industry events and often engaging with the local crypto community. He was a visible figure, not just within the confines of BitMEX, but in the broader cryptocurrency sphere. This visibility, while beneficial, also meant that Hayes was constantly in the spotlight. Every decision he made was scrutinized, every success amplified, and every misstep magnified. The pressure of leading a groundbreaking company in such a volatile industry was immense. Yet for Hayes, the stakes were never just financial. They were deeply personal, tied to his vision of what the future of finance could be. As the years progressed, the cracks began to show. The regulatory landscape was shifting, and BitMEX, with Hayes at the helm, found itself at the center of a growing storm. The very qualities that had propelled BitMEX to the forefront of crypto trading, innovation, leverage, and aggressive growth, now posed existential risks. Hayes faced mounting legal challenges, a reality that would test his leadership and resolve. As we stand at this juncture, the story of Arthur Hayes and BitMEX is far from over. The next chapter will explore the legal challenges that loomed on the horizon, examining how Hayes navigated these turbulent waters while striving to protect the legacy he had built. The rise of BitMEX was meteoric, but as the saying goes, the higher you climb, the harder the fall. Yet for Hayes, the journey was never simply about reaching the pinnacle. It was about shaping a future that was yet to be written. As we move forward, we delve deeper into the complexities and controversies that would define the next chapter of this saga. Join us as we unravel the unfolding challenges and the resilience of a leader facing unprecedented scrutiny. What comes next is a testament to the enduring impact of vision and innovation in the face of adversity. Stay with us. Stay with us. In October 2020, the world of cryptocurrency was disrupted not by a market crash or a groundbreaking invention, but by legal indictments. The U.S. Department of Justice announced charges against Arthur Hayes, co-founder of BitMEX, and his associates. This marked the beginning of a critical chapter in the BitMEX saga, a fall from grace steeped in legal complexities. The charges were significant. Hayes and his partners were accused of violating the Bank Secrecy Act by allegedly failing to implement adequate anti-money laundering measures. For a company operating on the fringes of financial regulation, The indictment was more than just a legal inconvenience. It was a fundamental challenge to BitMEX's business model. BitMEX had long been a bastion for traders who favored anonymity and high-risk, high-reward opportunities. Operating from Hong Kong, the exchange attracted users globally by offering leverage of up to 100 times their capital. But in doing so, it also attracted the scrutiny of regulators who viewed these practices with increasing suspicion. Arthur Hayes, born in Buffalo, New York, in 1985, had always been a visionary. After graduating from the University of Pennsylvania's Wharton School, Hayes honed his skills as an equity derivatives trader at Deutsche Bank and Citigroup in Hong Kong. BitMEX, launched in 2014, was the embodiment of his belief in the transformative potential of cryptocurrency derivatives. However, the very innovations that propelled BitMEX to the forefront of the industry also drew regulatory ire. The perpetual swap, introduced by BitMEX in 2016, allowed traders to speculate on Bitcoin without expiration dates, but it also amplified the risks associated with leveraged trading. Critics argued that BitMEX's liquidation mechanisms were predatory, exacerbating losses for retail traders. In private, Hayes was confident, brash even, convinced of his rightness in providing tools for a new financial future. Yet, as regulatory focus tightened, the atmosphere within BitMEX shifted from one of innovation to one of caution. The exchange found itself caught in a web of compliance challenges, struggling to reconcile its operations with an evolving legal landscape. For years, BitMEX operated beyond the reach of traditional financial oversight, thriving in the legal gray area of cryptocurrency. But the charges from the Department of Justice, alongside a civil suit from the Commodity Futures Trading Commission, painted a different picture, one of negligence and defiance. The allegations suggested that BitMEX had become a haven for illicit activity due to its purported lack of basic compliance measures. October 1, 2020, was a watershed moment. As news of the indictment spread, the cryptocurrency community was jolted. The charges against Hayes, along with co-founders Benjamin Dello and Samuel Reed, were not just legal repercussions but signaled a potential shift in the regulatory approach towards the entire crypto industry. Hayes, residing in Hong Kong, faced an uncertain future. With extradition a looming possibility, he had to navigate the complex corridors of international law. The charges carried significant weight, threatening not only his freedom but the integrity of the empire he had meticulously built. Meanwhile, BitMEX scrambled to assure its users and stakeholders. Despite the legal challenges, the exchange continued operations, attempting to maintain stability amid growing uncertainty. But the impact on its reputation was undeniable. Major withdrawals followed, as users questioned the security and longevity of the platform. The legal proceedings were drawn out, spotlighting the complexities of regulating a borderless, decentralized financial ecosystem. Hayes, known for his articulate defenses of cryptocurrency, found himself in a new role, defending his actions and the ethos of BitMEX against allegations of unlawful conduct. Regulators globally observed the unfolding drama, understanding its implications for the broader cryptocurrency market. The case against BitMEX highlighted the challenges faced by regulators in policing innovative financial products that defy traditional categorizations. It underscored the delicate balance between encouraging innovation and ensuring market integrity. For Hayes, the personal toll was substantial. The charismatic leader, once a symbol of crypto's rebellious spirit, now faced the harsh realities of potential imprisonment and financial penalties. His journey from a promising career in traditional finance to becoming a crypto innovator was marked by its own set of contradictions. Success marred by oversight, visionary ideas clashing with regulatory frameworks. The collective actions against BitMEX and its leadership were a clarion call to other exchanges operating in similar legal limbos. The charges emphasized the necessity for robust legal and compliance frameworks, even in the largely unregulated cryptocurrency space. The landscape was shifting, and exchanges that had once operated with near impunity were now under the microscope. In the months that followed, BitMEX took steps to address the regulatory concerns. The company initiated efforts to enhance its compliance protocols, signaling a shift towards more structured governance. Yet, the shadow of past actions lingered, and the path to redemption was fraught with challenges. As we close this chapter, the narrative of Arthur Hayes and BitMEX serves as a cautionary tale. It highlights the perils of operating at the cutting edge of financial innovation without adequately addressing regulatory expectations. The fall was not just a legal battle, but a profound moment of reckoning for an industry that prides itself on decentralization and disruption. In the next chapter, we will explore the ramifications of BitMEX's legal challenges on the cryptocurrency market. We will examine how this case influenced regulatory approaches worldwide and shaped the future of crypto trading platforms. Join us as we delve into Fall from Grace. Join us as we delve into Fall from Grace. The decline of BitMEX began quietly, almost imperceptibly at first, amidst the cacophony of an ever-evolving cryptocurrency market. For Arthur Hayes, it was as though a storm had stealthily gathered on the horizon, one that would soon unleash its full fury. In the early days of 2020, BitMEX still stood tall as a titan in the world of Bitcoin derivatives. But beneath its robust architecture, cracks had begun to form. Regulatory bodies, especially those in the United States, had started paying closer attention to the exchange's operations. The U.S. Department of Justice and the Commodity Futures Trading Commission had BitMEX in their crosshairs, investigating its compliance with anti-money laundering, AML regulations, and the Bank Secrecy Act. For Arthur Hayes, who had moved to Hong Kong in pursuit of a more favorable environment for his financial innovations, the legal scrutiny was a formidable challenge. He had always been a visionary, daring, innovative, and unafraid to push boundaries. Yet this new reality forced him to confront the limitations of operating outside traditional regulatory frameworks. As Hayes navigated these turbulent waters, he realized that the very freedoms that had enabled BitMEX's rapid ascent now threatened its survival. On October 1, 2020, news broke that the U.S. Department of Justice had filed criminal charges against Hayes and his co-founders, Samuel Reed and Ben Delo. They were accused of willfully failing to implement AML procedures, a charge that carried significant implications. These legal battles were not just about fines or sanctions. They represented a broader clash between innovation and regulation, between the old financial order and the new. The charges marked a turning point not just for BitMEX, but for the entire cryptocurrency industry. Regulators around the globe began to take a more aggressive stance toward exchanges that operated in legal gray areas. This was not merely about BitMEX's compliance. It was a signal to the industry that the era of unregulated crypto trading was coming to an end. As one of the most high-profile figures in the space, Arthur Hayes found himself at the center of this seismic shift. During this period, the human side of the story often got lost amid headlines and financial analyses. Behind the scenes, Hayes and his team were grappling with immense pressure. For Hayes, who had always thrived on calculated risks, this was a challenge of a different nature, one that involved legal intricacies and reputational stakes rather than the volatility of crypto markets. Arthur Hayes was born in Buffalo, New York, in 1985. He had always been driven by a desire to explore the cutting edge of finance. After graduating from the University of Pennsylvania's Wharton School with a degree in economics, he worked at Deutsche Bank and Citigroup as an equity derivatives trader in Hong Kong. These experiences gave him a unique perspective on the financial system and ignited his vision for what BitMEX could become. With the creation of the perpetual swap in 2016, BitMEX had offered a revolutionary product that allowed continuous leverage without expiration. This innovation pushed BitMEX to the forefront of the crypto derivatives market, offering traders up to 100 times leverage. But with great innovation came great controversy, as critics pointed out the predatory nature of BitMEX's liquidation mechanisms. Traders could lose their entire investments in the blink of an eye, raising ethical questions about the exchange's operations. As BitMEX's legal challenges unfolded, these criticisms gained new weight. The exchange's practices were scrutinized under a harsher light, and Hayes's leadership faced intense examination. The man who had once been celebrated for his boldness and foresight now found himself portrayed as reckless and dangerously ambitious. It was a narrative that many in the industry feared could stifle future innovation. As 2020 drew to a close, Hayes made the difficult decision to step down as CEO. It was a move that symbolized a significant shift in BitMEX's approach, a pivot towards compliance and regulatory cooperation. This decision was met with mixed reactions. Some viewed it as a necessary step toward redemption, while others saw it as a retreat from the principles that had defined BitMEX's early success. Yet for Hayes, this was not the end of his journey. The next chapter would involve navigating not just personal legal challenges, but also contributing to discussions about the role of regulation in the growing crypto landscape. Hayes continued to advocate for a balanced approach, one that acknowledged the need for oversight while preserving the innovative spirit that had fueled crypto's rise. Throughout these tumultuous times, the broader cryptocurrency market reacted with complexity. BitMEX's decline coincided with a maturation of the industry, where other exchanges began to rise to prominence, often adhering more closely to regulatory standards. The fall of BitMEX served as a cautionary tale, a reminder of the fine line between innovation and compliance. By 2021, the narrative surrounding BitMEX and Hayes had settled into one of reflection and recalibration. As the world grappled with the implications of regulating digital currencies, Hayes's experiences offered valuable lessons. They highlighted the need for a nuanced understanding of how new financial technologies interact with existing legal frameworks. Arthur Hayes's story is not merely one of rise and fall. It is a narrative of evolution, of learning from past missteps to shape future endeavors. As the dust settled, the key question for Hayes and the industry at large was how to harness the disruptive power of cryptocurrency while ensuring it aligns with societal values and legal responsibilities. In the wake of these events, Hayes's legacy remains a subject of debate. For some, he will always be the maverick who dared to challenge the status quo. For others, he is a cautionary figure, emblematic of the perils that lie in uncharted waters. What is certain, however, is that his impact on the world of cryptocurrency is indelible. As we conclude this chapter, the story of Arthur Hayes and BitMEX continues to unfold. New challenges and opportunities are on the horizon, not just for Hayes, but for the entire cryptocurrency industry. The lessons learned from BitMEX's journey will undoubtedly shape the next wave of innovation and regulation in this dynamic field. In the next chapter, we will reflect on the legacy of BitMEX and Arthur Hayes, exploring the lessons learned and the future of leverage in crypto trading. Stay with us as we uncover the enduring influence of this pivotal moment in financial history. As the dust began to settle from the storm of legal battles and public scrutiny, those deeply involved began to ask themselves a compelling question. What, if anything, did the saga of Arthur Hayes and BitMEX leave behind for the cryptocurrency world? The investigation into BitMEX was not merely an examination of one man's ambitions, but a critical inquiry into the very fabric of a rapidly evolving financial frontier. In October 2020, the U.S. Department of Justice and the Commodity Futures Trading Commission filed charges against Arthur Hayes and his co-founders, Ben Dello and Samuel Reed. They were accused of failing to implement adequate anti-money laundering measures on their platform. This legal scrutiny shone a light on the often opaque practices within the crypto industry. The implications were vast, signaling a new era of regulatory oversight for cryptocurrency exchanges. As authorities delved deeper into BitMEX's operations, they uncovered a culture that prioritized innovation and rapid growth over regulatory compliance. An environment where the thrill of high-stakes trading overshadowed the obligations of adhering to financial laws. Arthur Hayes, a Wharton-educated former banker, had built a platform that offered up to 100 times leverage, drawing both admiration and criticism. The allure of such high leverage was undeniable, especially in a market characterized by volatility and opportunity. In interviews, Hayes often portrayed himself as a visionary, someone who saw the future of finance unfolding through the lens of cryptocurrencies. However, the charges against him and his team forced many to question whether this vision was built on a foundation of regulatory evasion. The legal proceedings revealed that while BitMEX was headquartered in Seychelles, a jurisdiction known for lax regulatory oversight, the platform's influence reached far beyond its tropical base. The investigation painted a picture of a company that, at its peak, processed billions of dollars in trades daily. The BitMEX team had managed to create a tool that was revolutionary yet perilously unregulated. The perpetual swap, introduced by BitMEX in 2016, allowed traders to bet on the price of Bitcoin without ever owning the underlying asset. A concept that was as ingenious as it was risky, especially for inexperienced traders. For many traders, BitMEX represented the democratization of financial tools that were traditionally reserved for Wall Street professionals. Yet, the platform's aggressive liquidation mechanisms often led to massive losses, permanently altering the fortunes of many users. Critics argued that these mechanisms were predatory, designed to profit from traders' losses rather than their success. This perception further fueled the ongoing debates about the ethical responsibilities of financial service providers in the uncharted waters of cryptocurrency trading. Arthur Hayes' leadership style was often described as charismatic yet enigmatic. Employees recount stories of a man who was both approachable and intensely focused. Hayes' vision for BitMEX was clear: to create a trading platform that could rival the largest financial institutions in the world. He was known for pushing the boundaries of what was possible, a trait that earned him both respect and suspicion. Despite the charges, Hayes remained defiant. He argued that BitMEX was being unfairly targeted as a scapegoat for the broader issues within the cryptocurrency market. In a world rapidly moving towards decentralization, he viewed regulatory interventions as antiquated barriers to innovation. Nevertheless, the legal challenges he faced underscored the necessity for clearer regulations in the crypto space, a sentiment shared by industry experts and regulators alike. By 2021, as the case unfolded, the world watched closely. The outcome would set a precedent for how cryptocurrency exchanges operated under U.S. law. As the investigation progressed, it became clear that BitMEX's legacy was more than just financial innovation. It was a catalyst for regulatory reform. The lessons from BitMEX's rise and fall were not lost on the burgeoning crypto industry. Exchanges began to implement more stringent compliance measures, recognizing the importance of adhering to international financial standards. The BitMEX case highlighted the need for a delicate balance between innovation and regulation, a balance that would define the future of cryptocurrency trading. Arthur Hayes' journey from a Wall Street trader to a crypto visionary serves as a cautionary tale. It is a story of ambition, ingenuity, and the relentless pursuit of success, but also one of oversight and vulnerability. The investigation into BitMEX forced the industry to confront hard truths about the risks and responsibilities inherent in the digital economy. As the legal proceedings against Hayes and his associates drew to a close, the industry stood at a crossroads. Would the lessons learned from BitMEX's missteps guide the next wave of crypto innovation, or would history repeat itself in new and unforeseen ways? Despite the controversies, Hayes's impact on the crypto world is undeniable. His work at BitMEX challenged conventions and set new standards for what was possible in digital finance. However, this legacy is intertwined with the consequences of regulatory noncompliance and the lasting effects on traders who experienced both the highs and lows of leveraged trading. In the end, the investigation into BitMEX served as a pivotal moment for the cryptocurrency market. It prompted a reevaluation of how digital assets are traded and regulated, with lasting implications for exchanges and traders worldwide. As the industry continues to evolve, the lessons from BitMEX will remain a touchstone for future developments. The story of Arthur Hayes and BitMEX is far from over. As new players enter the crypto arena, the balance between innovation and regulation will continue to shape the market. Hayes's journey reminds us of the complex interplay between vision and reality, ambition and accountability. And so, we look to the future, where the echoes of BitMEX's legacy will influence the next chapter of cryptocurrency evolution. A future where the lessons learned may very well redefine the boundaries of financial possibility once more. A future where the lessons learned may very well redefine the boundaries of financial possibility once more. Arthur Hayes, a figure both revered and reviled, stands at the center of this transformation. The tale of BitMEX and its groundbreaking influence in the cryptocurrency realm is a convoluted journey of ambition, innovation, and controversy. From a single idea born from Hayes's vision, the ripples have extended far beyond the initial waves of disruption. Set against the backdrop of Buffalo, New York, where Arthur Hayes was born in 1985, this saga began in an unlikely setting. Hayes's path from the Wharton School of the University of Pennsylvania to the bustling trading floors of Hong Kong was marked by determination and intellect. His career with Deutsche Bank and Citigroup as an equity derivatives trader honed his understanding of financial instruments. It was here, amidst the corridors of high finance, that Hayes's keen interest in Bitcoin began to take shape. In 2014, Hayes co-founded the Bitcoin Mercantile Exchange, BitMEX, with Ben Dello and Samuel Reed. This venture was more than just an exchange. It was an audacious attempt to revolutionize the trading of Bitcoin. The introduction of the perpetual swap in 2016 was pivotal. BitMEX's innovation allowed traders to engage in leveraged trading without expiration, providing continuous leverage up to 100 times. This was not merely a technical innovation, but a reimagining of how trading in the digital age could operate. The success of BitMEX was meteoric. By 2020, it had become the largest Bitcoin derivatives exchange. Its rise underscored the hunger within the market for both opportunity and risk. Yet, with great power came significant responsibility. Critics decried the platform's liquidation mechanisms as predatory, a ticking time bomb for those unaware of the nuances in high-leverage trading. Arthur Hayes's leadership was charismatic and visionary. He was seen as a disruptor, unafraid to challenge norms and embrace the frontier of digital finance. His public persona, marked by audacity and sharp insights, drew both admiration and scrutiny. Residing in Hong Kong, Hayes operated BitMEX with a distinct flair, blending Wall Street acumen with an entrepreneurial spirit. He navigated the complex landscape of cryptocurrency with both strategy and a sense of adventure. However, the innovative practices of BitMEX soon drew the attention of regulators. In 2020, the U.S. Department of Justice leveled charges against Hayes and his co-founders for allegedly violating the Bank Secrecy Act. The legal challenges brought into sharp focus the tension between innovation and regulation. Operating in a nascent industry, often in a gray area of legality, BitMEX became a symbol of both the potential and pitfalls of the cryptocurrency revolution. The fall from grace for BitMEX and its charismatic leader was swift and public. As legal proceedings unfolded, the company faced penalties and restructuring. For Hayes, the personal and professional implications were profound. His journey from financial prodigy to a cautionary tale was complete. Yet this was not merely the end, but potentially a new beginning. The legacy of Arthur Hayes and BitMEX endures in many forms. For the cryptocurrency industry, it is a reminder of how quickly fortunes can change and how deeply innovations can impact markets. The introduction of the perpetual swap is now a staple in the crypto derivative space, a testament to the enduring influence of BitMEX's pioneering moves. Yet it also serves as a warning of the volatility and inherent risks embedded within the system. Human stories thread through this narrative, illuminating the broader impact. Traders who tasted both phenomenal gains and devastating losses provide a window into the emotional toll of high-stakes trading. For some, BitMEX was a stepping stone to financial independence. For others, it was a harrowing lesson in the dangers of over-leverage. These personal tales resonate with anyone who has ever ventured into the risky waters of financial speculation. Beyond the individual, BitMEX's story compelled the industry to reckon with itself. The regulatory scrutiny it faced catalyzed broader discussions about security, transparency, and ethical practices within cryptocurrency exchanges. Industry players were pushed to adopt more stringent compliance measures and develop robust frameworks to protect users. The ripple effects continue to shape regulatory landscapes across the globe. In understanding the lessons from BitMEX and Arthur Hayes, we confront fundamental questions about innovation, regulation, and human nature. The balancing act between fostering technological advancement and ensuring safe, structured markets is delicate. As the cryptocurrency ecosystem evolves, the insights gleaned from BitMEX's rise and fall are crucial in navigating future challenges. BitMEX's story stands as a chapter in the broader history of financial markets, one marked by rapid change and transformative potential. The lessons learned here are not isolated, but part of a continuum of financial evolution. They echo past innovations, like the emergence of futures markets in the 19th century or the birth of electronic trading in the late 20th century. Each iteration brought new possibilities, but also new responsibilities. As we look to the future, the legacy of Arthur Hayes and BitMEX invites a reflective pause. It is a call to weigh ambition with caution, to pursue progress with an awareness of its consequences. For those who continue to push the boundaries, the lessons from this saga are invaluable guideposts. In the end, BitMEX's tale is one of human endeavor, the relentless pursuit of innovation amidst uncertainty. It is a reminder of the profound complexities at the intersection of technology and finance. As we draw to a close, the echoes of Hayes's decisions and their impact continue to reverberate, shaping new paths in the world of digital currencies. The story of BitMEX is far from over, its legacy woven into the fabric of ongoing innovation. And so, the narrative unfolds, urging us to consider what lies beyond the horizon. As we turn the page, we delve into the next chapter, where new opportunities and challenges await. In the ever-evolving landscape of cryptocurrency, what new ventures will arise from the seeds planted by pioneers like Arthur Hayes? What lessons will the future hold for the next generation of innovators and traders? These questions beckon as we continue our exploration into the unknown. As we reflect on the journey of Arthur Hayes and the rise and fall of BitMEX, we're reminded of the powerful dance between innovation and regulation. In the vast tapestry of financial history, BitMEX stands as a testament to the allure and danger of unbridled ambition. Arthur Hayes, born in Buffalo, New York, and educated at the Wharton School, saw in Bitcoin not just a digital currency, but a canvas for financial invention. From the bustling trading floors of Hong Kong, he recognized the untapped potential lying dormant within the blockchain, and he reached out to grasp it. Through BitMEX, he introduced the world to the perpetual swap in 2016, offering traders a tool that was both revolutionary and perilous. In those early years, the cryptocurrency landscape was a wild frontier, largely free of oversight. Hayes navigated this space with dexterity, building BitMEX into the largest Bitcoin derivatives exchange by 2020. Yet, as the allure of leverage grew, so too did the risks, both for the traders enticed by high-stakes opportunities and for Hayes himself. The story of BitMEX is, in essence, a reflection on human nature, on our ceaseless drive for more, and our willingness to dance on the edge of risk for the promise of reward. Trust and money, two of civilization's most foundational concepts, were tested in ways that few foresaw. The collapse under the weight of legal scrutiny was inevitable, a stark reminder of the balance required in any financial system. BitMEX's liquidation mechanisms, criticized as merciless, underscore an ethical debate that echoes across the crypto world. They highlight a darker side of technological advancement, reminding us that innovation without accountability can lead to unforeseen consequences. Yet, the legacy of BitMEX and the perpetual swap endures, woven into the fabric of modern trading. Today, these instruments continue to shape markets, a testament to their utility and resilience. But with their continued presence comes a collective responsibility to learn from the past and to steer future innovations with caution and integrity. As Arthur Hayes continues to write, invest, and predict, he remains a figure of both intrigue and caution. His story invites us to consider the profound impact of our creations and the ethical responsibility that accompanies them. And so, as we gently close this chapter, let the lessons linger in the quiet of the night. Reflect on the delicate balance between bold exploration and grounded ethics. In the stillness, may you find peace, as the story's echoes fade and sleep draws near, wrapping you in its gentle embrace.